What is up, traders? Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. Today's video, we're going to discuss what Bitcoin did last week. We're going to talk about a new toy that Glassnode has out. We're going to look at that a little bit, and we're also going to talk about what we're going to be looking for the week to come. Make sure you guys stick around until the end. All right, first thing is first, Bitcoin has not been able to close a weekly candle above $43,178 since it broke down here in January. So for all of 2022, Bitcoin has not been able to close a weekly candle above that price. It is showing you that Bitcoin is weaker than it is strong. Last week, we had this nice big bullish run. We were looking for that to be a potential yearly open test. Let's go over here and I'll pull up the yearly open for you. This is your yearly open. You can see that price has failed on 2 attempts once got up there to test that yearly open, which could indicate that there's a lot more supply at the yearly open than there is demand. Otherwise, price would have went above it. Since you keep selling off when you get close to it, it's very indicative that you're going to see that lower push. Back to the weekly time frame we go. All right, so here it is. There is that yearly open. This is a major swing low that occurred back in 2021 on September before you had your all-time high push. Then once you close this weekly candle below it this year, that has held as resistance. Then you formed another resistance level under there. So this weekly resistance is $42,415. You have not been able to close a weekly candle above that either. Last week you tested it, failed. This week you tested it, failed. Tomorrow is the close, so this thing could get a big bullish push and close up above that tomorrow. It's very unlikely though if we go and look at the daily time frame. You can see that weekly support is still and is always going to be support until you get a weekly close below that. That price is $37,717. And if you do get that, we're going to be looking for a lower push, and then we could potentially see this pattern break down and give us that capitulation run lower. If you look at this as a pattern trader, I am not a pattern trader, all right? Because in my opinion, you cannot get consistent entries if you're trading head and shoulders, cup and handles, rising wedges, falling wedges. Right there, you're trading 4 different entry and exit techniques. So there is no consistency there. This channel will help you reach consistency. So if you haven't yet, subscribe. Here's that bear flag. With an impulse move down, this is a corrective phase. You can see the corrective phase clearly. If I throw on a trend line there and then throw on a trend line here, that makes a bear flag. There's your flagpole. This is your flag in formation. If you break down below that, you could potentially get a measured move from we'll just do a rough estimate about like say here, a little lower than that, right about there, and then you can see that that puts you right at about $22,800. Now, why is this relevant? Why would this measured move be relevant? Well, let's go to the CME chart and I will show you why. All right, so here we are on the CME daily chart, and right off the bat you can see that you have 2 unfilled gaps down here. Now, the CME chart does like to fill gaps. I've looked at this chart in its entirety, and the only unfilled gaps that we have are 3 of them, and all 3 of them are under price. All 3 of them. This is the top one. You have this one, and then you have a very small one down here at $9,000. I don't really care about this gap. In my opinion, that gap was filled. I am not saying that price could go down there because I think that gap is filled already. But these 2 gaps right here are clearly not filled. So if you put that measured move, remember the measured move off the bear flag, down, another impulse leg to the downside, gets you down to about $22,800. If you get down to $22,800, you fill this gap. Now there is another gap under there, and price could mosey on down there to fill it. But one thing that Bitcoin has never done before in its entirety is when it makes an all-time high, the next market phase or the next market cycle does not go back and retest that all-time high. Now that has been the scenario up until now, and it's still intact to this day. You have never retested an old all-time high, and you can see that this lower gap is down there below your old all-time high. So I'm not suggesting that Bitcoin's going down there. I am suggesting that Bitcoin could potentially come down and fill this gap here and then find support. And there are a few Glassnode metrics that support that theory. So let's go over here to this Glassnode, the new tool that they just put out. Let me do something real quick. Let me go over here and zoom all the way out so you can see it in its entirety. Now, the way this tool works is the dark areas show you there is no accumulation. It doesn't necessarily mean that there is sell side happening there, and it does not necessarily mean that there is distribution there. It only means one thing, that there is no accumulation happening. That's what the darker area represents. The wider area represents where you do have that accumulation, where people are adding coins to their HODL positions. So that's what you got there. You can see that there is a lot of all-time high buying going on in the old cycles, but you know, that's what people do in retail. They love to buy highs, they love to sell the lows, and that's going to be around until the end of time, more than likely. But you can also see where the accumulation starts to happen or stops happening in the bear market phases. Accumulation happens in the bull market phases, and it stops in the bear market phases. If you go over here to where we currently are, well, let's do this. All right, let's show you the capitulations that have happened. So Bitcoin has 3 cycles, right? Has had 3 halvings. So we go on those 3 cycles. This is your 2013 all-time high. This is your bear market phase of that cycle. Notice this section of price, how you have this sideways chop for a long period of time. That's basically doing the same thing that we're doing now. People probably thought this was the bottom, and you could tell that people thought it was the bottom because that's where they started accumulating. Then you had this capitulation run lower, then you had more accumulation there, and then that also marked the bear market low of that bear market cycle. Same thing happened 2017. There's your bull market phase. Then you have your bear market cycle. No accumulation really going on here. Then you get that long-term sideways choppy price action. People thought that 6K was the bottom here. Then you can see that capitulation run lower. Price goes down. There you start your accumulation phase. You also mark your bear market low of this cycle. So if we come over here to where we currently are, same scenario, all-time high, have a lot of buying going on, then price fades away. Then you get this slow sideways choppy price action where there is no accumulation occurring at all, right? No accumulation occurring at all. According to this metric, it is a new tool, so we're going on by what this thing is saying. Also, price action says it too. I already discussed that at the beginning portion of this video. No accumulation occurring. So what we are looking for is we are looking for that capitulation run lower for that accumulation to start to happen, and that could indeed then mark the bear market low for this market cycle. That's when you want to be a buyer. All right, I have to warn you, there is a bright screen coming up. All right, so here you have, this is the Fed Watch CME Fed Watch tool. You can see that the CME markets is pricing in a 94% chance that you are going to get a 25 basis point rate hike on March the 16th. Target rate probabilities for March 16, 2022 Fed meeting. That is happening this week coming. All right. This suggests that we're going to see a rate hike. I think the market has already priced in a rate hike. So what we're going to be looking for, we're going to go back over to the chart. All right. So back here on the Bitcoin chart, let's go ahead and get rid of that stuff as we've already discussed it. Now, what we're going to be looking for, last week we had an inflation print. The inflation print came in line with expectations. I will show you that. All right, so here we have the core inflation print. You can see here that the forecast was 7.9%. The previous month inflation print was 7.5%. You did get that spike or that jump up to 7.9% inflation rate and you can see two things here. One, it came in line, so it was pretty much a nothing event for the markets. Second, it is higher than the previous month, and that has been the trend for the last several months. Inflation is trending higher, so that's why we are probably more than likely going to see that rate hike this week. How we're going to trade that, going back to the weekly, we'll draw our lines back on the chart so that way we know what we're going to be looking for. First and foremost, that weekly res, and then this weekly res, and also down here is weekly support. So we're going to potentially be looking for short side entries, and we're going to hopefully get a spike on the news. I'm assuming we might trade sideways for a little while until we get into the 16th, where then we could see the rate hike occur or not occur. Either way, I'm wanting to see Bitcoin spike, get a bullish push up to one of these three regions, where I will then look to put on a short side entry. Obviously, if I get a daily close above this price, which is that old weekly res, look how you also have daily supply lined up absolutely perfectly with that weekly support zone or that weekly resistance. So if we get a spike up to there, that would be an absolute fantastic entry to look for bearish entries targeting back down to the low edge of this range. So that's where I'm going to be watching. If we get a daily close above $43,178, then I will probably be wrong on my entry and more than likely get stopped out, and that is okay. We took a trade this morning that I did post on the Trade Talk Twitter page. You can see here I posted the trade on Twitter before the trade happened, right at when I took my entry. Basically said it's very much range bound, but nevertheless there might be something here. If you close an hourly above this bearish candle, then you're probably going to be wrong on the trade to exit it. All right, that was the entry, and then right here was the post showing what happened. Beautiful push higher, boom, right down into targets, took profits, moved my stop to break even. I have 25% of that position still on. So if it wants to continue, then I'll make money already where it currently is, but I do believe we're going to see a spike next week during that news event, and we're going to be looking to take entries based on what data we get through that week. Thank you guys so much for watching this video. Make sure you guys trade safe, make sure you trade smart, and as always, happy trading, everybody.